Hi everyone. How are you today? I will assist you in this chapter. Chapter 5. Have you ever thinking on how a business raise fund? Okay, to answer that, we must understand type of funding available. As such, this chapter discuss on topic sources of financing. The topic outcome for this topic are: Number 1, you should be able to identify the need of long-term and short-term financing. Number 2, you should be able to discuss the benefits of long-term and short-term financing. Okay, as an overview of this topic, refer below. First, we look at ordinary shares. Ordinary shareholders is the owners of the company, sometimes known as common stocks, especially in finance term. Ordinary shareholder have right to vote for the management, which is the board of director. Ordinary shareholders are entitled to share in the profits for dividends, only after dividends have been paid to other classes of shares, which is preference shareholder. And, rate of dividend is not fixed, it's based on the profit of the company. They are entitled to obtain information, such as an annual report. However, ordinary shareholder is the last party to claim in case of bankruptcy, which indicate high risk. On the other hand, high reward due to capital gain and dividend. Okay, next is preference shares. Payment of dividends based on preference right, and the amount is fixed. Preference shareholders has no voting rights except for preferential dividends remain unpaid for arrears. In event of bankruptcy, priority claim is given to preference shareholder before ordinary shareholder to claims on assets of business. Next is type of preference share. Cumulative preference shares means that the dividend will be carry forward, if the company does not able to distribute dividend during the year, maybe due to suffer losses. Non-cumulative means that, the dividend will not be carry forward, even though the company do not distribute dividend during the year. Participating means that, the shareholders able to get additional dividend plus with the fixed rate. Maybe after distribute dividend to the ordinary shareholder, the company still have extra profit to allocate as dividend. Non-participating, on the other hand, do not eligible for additional dividend. Next is redeemable preference, the type of shares that the company need to redeem after certain period. Other preference share is classify as equity, but redeemable preference share is a debt. Because, the company need to buy back from the shareholders and they have obligation to pay interest. Finally, convertible preference share is where the share can be converted into ordinary shares. It's good as ordinary shareholders have more benefit than preference shareholders. Next is warrant. Warrant is a derivative instrument that gives its holder the right, but not obligation, to buy a given quantity of the underlying shares at a predetermined price, or known as exercise price, on or before a particular date, which is an expiry date. You need to exercise the right, or else you are not entitled any benefit from the share such as dividend. Anyway, warrants are issued and guaranteed by the company. Sometimes warrant may be issued attached to a bonds, to make it more attractive. Since bonds are quite expensive. Have you ever seen what warrant looks like? As you can see, this is the sample of warrant document. You can go the website www.malaysiawarrants.com.my to explore yourself. Warrant are divided into two: call warrant and put warrant. Call warrant is a specific number of shares that can be purchased from the issuer at a specific price on or before a certain date, while put warrant is a certain amount of equity that can be sold back to the issuer at a specified price on or before a stated date. One of the advantages of warrant is that it's allow you to wait for the optimum moment to buy or sell the shares before warrant's expiration date. Next is characteristics and features of warrants. The sample given on previous page, you can find all this information. Anyway, if you want me to explain further, please get the paid version of this apps. Or else, you still can learn by reading on your own. Okay, enjoy learning everyone. Bye bye.